A leader in developing cystic fibrosis medicines, a company that expected to grow its revenue by 70% in 2 years, with a full pipeline of medicines and clinical trials and a superb balance sheet. Let's go, master, buy this stock right now. Hold it 1 second, puppy. Let's do a full analysis and see if VERTEX is a good buy for us now. By the way, drop a comment below. Tell me what's your opinion about VERTEX, and we'll see by the end of this video if we reach the same conclusion. Disclaimer, as always, this is not a financial advice. Do not listen to YouTubers and make your own decisions. We're going to look at the business, the balance sheet, 2 methods of valuation, the charts. The final verdict will be reached by the end of this video. And by the way, there's a hidden gem waiting somewhere in the middle. VERTEX develops and produces therapies for genetic diseases, mainly for cystic fibrosis. Cystic fibrosis is a genetic disease caused by gene mutations. Over the years, due to improved treatment, life expectancy grew to a median of 44 years and is still growing. VERTEX is the leader in this market and actually some sort of a monopoly, and its products are patent protected for more than a decade. The addressable market for cystic fibrosis in the United States and Europe is about 83,000 patients. By now, over half of them are treated by VERTEX products and medicines. We have another 30,000 patients of addressable market. The price for admitted treatment per year is $300,000. It means that another 10,000 of patients worth $3 billion of revenue. Tricafta is a triple combination therapy produced by VERTEX. It was launched in 2020, and analysts expect the revenue to grow by 70% between 2019 and the end of 2021. They also have many more drugs in clinical trials in different stages, as we can see, and analysts expect their revenue to grow to $10 billion by 2028. But you should know that medicine development process takes 12 years in average from the lab to the shelf, and only 1 in 5,000 drugs actually makes it to the market. Also, approved drugs might be taken off the shelf if dangerous side effects are revealed later down the road. And although VERTEX is a monopoly in cystic fibrosis treatment, alternative treatment methods such as gene editing might present a risk to their main revenue stream in the future. Their revenue tells us the same story we talked about, a huge increase around 2020 due to the Tricafta's launch, which is their triple combination treatment for cystic fibrosis. Same goes with the cash flow, and we can see that the operating margin is 46%, which is excellent. Let's summarize the business. Cystic fibrosis, actually they have no current competition and they have a huge moat in this area. Each 10,000 patients worth $3 billion, which presents a huge revenue increase possibility. But they rely mainly on cystic fibrosis treatment, and at the moment, if they encounter regulatory problems or serious competition from other treatment technologies, the revenue might be affected seriously. Regarding other drugs in development, well, that's hope versus reality. Let me share with you a story, a personal story. In 2002, I was invested in Pharmaceuticals Corporation, which went into third stage of clinical trials for a treatment they developed. As you can see, the stock price went to the skies. But when they announced the failure of the third stage trials, the stock went to the floor. I kept this one in my portfolio, although I could use the losses for a tax calculation as a bitter reminder of the consequences of investing in dreams. This is a personal lesson for me, and at the moment, the other drugs for VERTEX seem something like that. Well, we summarized the business. I will give it a half a check mark. Let's look at the balance sheet. Actually, the balance sheet is superb. We can see they have $6.6 billion in cash, receivables of $0.9, and the total is $7.5 billion. We can see the short-term liabilities are simply ridiculous, with payables of $1.5 billion, some little of current debt and deferred revenues with a total of $1.9 billion. The current ratio is 4.3. This is excellent. Also, the long-term debt is actually non-existent with less than $1 billion. They can pay for it any second. So the debt is meaningless. So the financial position is very stable, and they have actually cash to develop their business. So the business got a half check mark. Balance sheet is superb. Let's look at the valuations. But before that, if you find this video helpful, please press the like button. Thank you so much as you're helping this channel. Let's look at the valuations. We're going to use the price to earning future growth model and a discounted cash flow model to reach a valuation. The latest data about their earning per share is shown here. And we can see that they stabilized their price to earning in about 21 to 22 in the past 2 years. Let's take everything into the model. We put honest estimations for earning per share for the upcoming 2 years over here. I gave them a growth rate of 10% for the first 3 years, then 6%, then 2.5%. Required rate of return is 10%, although I use usually 7.5%. Since it's a growth company and more risky, I want 10%. And for a safety margin, I used an expected price to earning ratio of 17 instead of the current 21. This gave me a fair value of $146. Of course, if you're less conservative than I am, you can use other numbers and reach a higher value, but for me, this enables me to sleep well at night. Let's look for reinsurance in the cash flow model. So I grew the revenue up to 2028 to 10 billion according to analyst estimations, but I reduced their margin gradually starting from 2023 because I think that as they proceed with clinical trials for other drugs, they will invest more in research and development and also marketing. This is for their margins will be reduced. These are the numbers. We'll take them into the model, put the cash flows over here. Again, required rate of return is 10%, and I assume they will grow their cash flow by 2.5% from 2024 and on, divide everything by the number of shares outstanding, and we come up with a fair value of $150 per share. Well, the valuation summary, we can see the current price when recording this video at 22 of March before trading hours is 215. And both our models agreed about the same price, around $150. So at the moment, the price of the stock represents the hopes and dreams that are already priced in, and for me it's overvalued. Well, we reviewed the business and the balance sheet and saw that the stock is overvalued. Remember I promised you some inside information? Let's move to insider.com and check insider transactions for the past months. We can see it's a one-way road. Everybody is selling the stock, all of the insider. There is only just one purchase over here, but one of the directors, and the rest of the traffic is a one-way. They're selling the stock for the past 12 months. What do they know that is not revealed to us? Think about it. Let's turn to the charts and see if we can learn something from them. The long-term trend for VERTEX is an uptrend, and we can see that in 2019, about the same time they launched their Tricafta triple treatment for cystic fibrosis, they broke out of the 195 to 200 resistance area, which later, as usually happens, became a support. Just an anecdote, you can see over here what happens when a company declares it failed a drug in clinical trials. We can see a drop of almost 20% in one trading day after one of VERTEX's drugs failed clinical trials. Let's put in the indicators and we can see that the price is below the 200-day moving average. The 200 level is being tested. We can see a formation of a head and shoulders pattern. For my estimation and analysis, the stock is in a downtrend, and once it breaks down below the 200 to 195 resistance area, we're going to see some serious drops in the price later on. So the charts didn't suggest any comfort for us, and my puppy wants to go out and play, so let's make it to the final verdict. By the way guys, if you like the content, please consider subscribing. VERTEX is a one-trick pony and they rely heavily on the cystic fibrosis treatment. All the hopes are already priced in the share price, and a dangerous head and shoulders pattern presents itself and suggesting further declines in the stock price. Also, don't forget the insider trading we saw. So for me, all the bells are warning and I'm out. Remember, do not listen to YouTubers. My puppy wants to do I am Gen X, so if you want also, drop a comment below. See you in the next video. Ciao!